How would you like to take out a loan, make payments on that loan, and make a profit after you've made all your payments? That's exactly what this video is all about. You're going to learn how taking a loan from your private family bank and using that money to say, buy a car or take a vacation can make you hundreds, even thousands of dollars in profits. That's what I call being smart with your money. And if you want to learn more about being smart with your money, you know what to do. Hi, Tony Manganello here. If you've seen any of my previous videos, you know I'm kind of a numbers guy. That's because when you know the numbers, you can make sure they are working for you instead of against you. And in this video, I'm going to show you some, they're pretty simple numbers where you're going to learn how you can profit when you use your private family bank to pay for things like a new car, a vacation, a wedding, or pay for Junior's education. Now, one thing I know is that numbers can be a little intimidating, but trust me, this is going to be simple. If you don't have a private family bank, at the end of this video, I'm going to have a couple of really good resources for you to check out, so stay tuned. In our example, you're going to borrow $30,000 from your private family bank to buy a car, and you're going to pay 5% interest on that loan over a 5-year term. But while you've borrowed $30,000 from your private family bank to buy that car, that same 30 grand is still earning interest and dividends for your future. Here's how it works. The $30,000 you have in your private family bank is used to collateralize a loan from the insurance company's general fund. This is why you can borrow the money without an application or a credit check. The insurance company puts a lien against your cash value for the amount you've borrowed, and you agree to pay them interest. At the time of this video, the interest rate is 5% and has been that rate since we've been using these accounts for about the past decade. But while you're paying them back, the cash value that was used to collateralize the loan continues earning interest at a guaranteed rate as well as dividends for your future. At the time of this video, the guaranteed rate is just a little over 4%. Now, I know what you're thinking. You're thinking, Tony, if I'm paying 5% on a loan and I'm earning 4% on the amount of money that was used to collateralize the loan, how the heck am I not going to lose money? Well, I'm glad you asked. Because you know what? The answer to that question can be found, you guessed it, in the numbers. And it starts with understanding how interest works. In this case, it's actually pretty simple and can be summed up in this one statement. You're paying 5% interest on a loan with a decreasing principal balance, and you're earning 4% interest on an increasing principal balance. You see, when you're making payments on a loan, each monthly payment lowers the amount of principal you owe each month. And the interest you're being charged, the 5% in this case, is assessed against the smaller principal balance. So every payment reduces the principal balance, also reducing the amount of interest you're being charged. When you're earning interest in your bank, the 4% in this case, each month the interest is added to the principal and compounds monthly in your favor. Let's take a look at our example where you borrow the 30 grand from your private family bank to buy a car. A $30,000 loan at 5% over 5 years will result in a payment of $566.14 a month. Like any car payment, this car payment remains the same for the entire 5-year period. Let's take a look at the amortization table for this loan. A loan amortization table shows you how each payment is broken down and how much of each payment is applied towards the interest for the loan and how much of that payment is applied towards the principal. In the first month, the balance is the 30 grand you borrowed, and the first payment has $125 going towards interest and $441.14 going towards the principal. Notice how the amount of interest you're paying continues to decrease from month to month. This is because the balance you're being charged interest on is also decreasing. Now let's take a look at the 30 grand that's in the cash value of your private family bank that was used to collateralize your loan. Notice how each month the balance increases. At a 4% annual rate of return, each month you're earning 1/12 of that 4% or 0.33%. See how the balance continues increasing along with the amount of interest you're earning. As the balance increases, so does the amount of interest you're earning each month. And then in month 13, You're paying $102.43 in interest that month, and you've earned $104.07 in interest that month. What this means is from month 13 all the way to month 60, you're earning more interest than you're paying. By the time you pay off your car, guess what? You've paid $3,968.22 in interest, but you've earned $6,629.90 in interest in your bank. That's a net gain of $2,661.68. When was the last time you bought a car and made money on the loan? Do you see how powerful it is and why you need to have a private family bank? Now, another benefit of using your private family bank to buy cars or pay for vacations is this. If you run into trouble and maybe you can't make a payment, guess what? Just skip your payments until you get back on your feet. You won't get any nasty collection calls and your credit won't get dinged. None of that garbage. You are always in control of your payments. Try doing that with a car finance company or any lender for that matter. This loan example is just one of many benefits a private family bank has to offer. And if you'd like to learn more about how a private family bank works, you have two options. First, you can click on the link below and schedule a call with us. Now, you need to know this is not a sales call. It's a simple conversation. You'll have a chance to find out more and get answers to any questions you may have about these incredible accounts and how you can benefit from one. But if you're not ready to have a conversation, that's cool. Then all you need to do is click the link below and get your hands on a copy of the ebook, The Banker's Secret to Permanent Family Wealth by my business partner, John Commuta. In it, you'll learn all you need to know about how a private family bank can help you get to where you want to be financially. Either way, you have got to find out how these awesome accounts work. And speaking of awesome, you know what? It would be awesome if you'd hit the like button and subscribe to our channel. And if you have any questions about this video, please drop it in the comments and I'll respond ASAP. Two quick things as we're wrapping this up. The loans you have right now, who's making a profit on them? If it's not you, then you know what you need to do. And the final thought is, do you think you'll have loans in the future? If you think you will, who do you want to be making the profit on those loans? You see where I'm going with this? Do yourself a favor and find out more. Thanks for watching, and I'll see you next time.